Can an accountant be a financial advisor? Well, yes. Uh, if you ask me, an accountant, a tax accountant, is a financial advisor if they advise individuals and families. So when you say accountant, accountant means quite a few things. But let's get into it in a little bit more detail. I'm Mark Little. I've owned a truly comprehensive financial services firm since April 28th of 1981. I've been around for a long time. A lot of these terms, financial advisor, wealth manager, mean different things to different people. And so I'm doing a series of videos just sort of unpacking all of this and give you something to think about. So if you're listening to this and you are an accountant, it'll put things in perspective, let you decide kind of what you want to do if you have any interest in this area of advising retail clients. If you're not an accountant, if you're just a financial advisor in some other area of finance and you're wondering, am I competing with accountants, or are accountants financial advisors, and you just want to know kind of from a industry curiosity perspective, we'll deal with that as well. So let's take it apart step by step. If any professional offers advice on finance to to a clientele that are individuals and families, let's just say that's a financial advisor. Uh, Oftentimes, clients tend to think of certified financial planners, investment planners, retirement planners. In other words, traditionally, financial advisor is someone that deals with investments or planning. Okay. So but I've done a lot of research on this. I've been around the block in the industry for a long time. I want to tell you how the term works from kind of a functional perspective. Um, if a tax accountant is serving individuals and families, offering them advice in terms of forward planning, yes, I would call this a financial advisor. Let's say a tax accountant uh, does tax preparation on an annual basis. You know, clients come in with all their taxes. They sit down and kind of go over it all with their tax accountant, and then they file their tax return. Is that financial advice? I think technically yes, but not in the context of what we're talking about here. I think when we look at the research from how clients perceive this term, financial advisor, what they are describing is a professional that helps the individual or the family with their forward planning. So the idea of sitting down and bringing in all your tax receipts and income and everything from the previous year. So that's kind of, tax accounting that has to do with tax preparation is looking backward, and accounting for the past and filing a tax return. It's done and dusted once you file the return. So, what is a financial advisor in the mind of a client? It's a professional that sits down with the client, and in addition to whatever else they're doing, let's say tax preparation, they are putting together some sort of a plan. And a plan implies strategies and tactics for the future. So, I'm going to introduce a term called a comprehensive written lifetime financial strategy as for what the strategy is. Now, this fits the definition broadly of affluent retail clients. They are looking for a professional to create for them a comprehensive, in this case, if you're a tax accountant, a comprehensive written lifetime tax strategy. So the question is, do you have the skill and experience and the time and the inclination and the desire for a family, sit down and create a comprehensive written lifetime tax strategy for them? Now, that's the strategy. And then on top of that, are you willing to create tactics or action items that are required to implement the strategy? So this is what clients are looking for when they say financial advisor. They're looking for strategies and tactics, forward planning, And I'll go through like what is a comprehensive written lifetime tax strategy in a minute. But in short, are you a tax accountant who's willing to do this sort of forward planning for your clients, your retail clients? All right. So what is a comprehensive written lifetime tax strategy? Well, when I say comprehensive, what I mean by that is you are creating a strategy that envisions all the other disciplines of finance. So, as you're thinking about a forward strategy around tax for this family, what are the implications when it comes to the other areas of planning and finance? So what are the tax implications of the client's money management? What are the tax implications of the client's estate planning? What are the client's comprehensive tax implications when it comes to spending money on an annual, like major purchases and so forth? So comprehensive means not only are you looking at the client's tax situation right now and making some recommendations as to what needs to happen going forward, you're looking at all the areas where there's some overlap, some crossover. For example, in money management, because of the nature of investment management or money management, investments are purchased and sold. Well, when an investment is sold, that triggers a taxable event. So how does the comprehensive written lifetime tax strategy recommend that be done? So want to make sure nothing falls through the cracks. So the tax accountant creating this strategy needs to look at all the areas of planning and make sure that in this strategy that's being created, it's documented how all of that's going to be coordinated. Okay, so comprehensive written. I have talked to enough subject matter experts. And if you're a tax accountant, you're a subject matter expert in the area of tax. All right. I've talked to enough subject matter experts over the years that think, oh, yeah, I'd be happy to create a comprehensive written lifetime tax strategy. I'll look over their file. I'll kind of immerse myself in their situation. You may even have a fact finder or a tax organizer you'd like them to fill out. But however you do it, once you've kind of got the client's situation in your mind, then the question is, how are you going to deliver this strategy to the client? And I'm saying it's got to be in writing. Now, frankly, at my firm, when we hire a tax subject matter expert to create a comprehensive written lifetime tax strategy for our truly comprehensive financial services ideal clients, well, I don't care the format. The tax accountant can create this strategy in a Word document. I've seen them submitted to me in the form of a PowerPoint or a keynote presentation with all the strategies noted. I've seen them submitted to us in different systems like Adobe InDesign and different programs. Frankly, I could care less the format. All I'm saying is it needs to be in writing. Any subject matter expert that thinks, yeah, I'm going to charge a client for a comprehensive written lifetime tax strategy, and then once I've created it in my head, then I'll sit the client family down and I'll just explain it to them. And it's up to the client to take notes and make sure everything gets done. No, it needs to be comprehensive, encompassing all the areas of finance, needs to be in writing. So when you produce this tax strategy, it's a document that is provided to the client. So it's comprehensive, written, lifetime. So what does lifetime mean? Well, the tendency when you're creating any sort of a strategy is to sit down and look at the situation and think what needs to happen now. It's natural and it's fine. Yes, you should make a list of all the strategies that need to be altered, improved, updated now. However, you need to look at the client's situation and project it out to the rest of their life. And if there are any action items in the client's future that involve tax that will need attention that you're currently aware of, then you need to document it in your strategy now. I'll give you an example. If you're creating a comprehensive written lifetime tax strategy and the client family is, let's say, in their mid 50s as far as their age, and they've got retirement accounts. Maybe he's got a 401k and she's got a SEP retirement account. Regardless, if you're not in the United States, these are tax qualified retirement accounts and they have tax implications, okay, tax benefits. The point is, as a tax accountant who's a financial advisor creating this tax strategy, just by seeing that those accounts exist, you know that there are rules around this in the client's future. For one thing, they can't start drawing money out until a certain age. Okay. Now, if the strategy is going to be that this client's, if you chat with the client and their objective is, I hope to be at financial independence by the time I'm 58 years old, just to kind of pick a hypothetical client goal. Well, that's what I'm talking about. At least in the US, that means there's some tax implications. So you need to put those action items in the strategy now, even though it's not going to be done now. It's that if you start taking distributions before a certain age, then here's the recommendation. Okay. Also, just because a client has these types of accounts, there's an age at which they must begin taking distributions. We call them minimum required distributions. So do you see what I'm saying? Your tax strategy needs to be comprehensive, looking at all areas, needs to be written, needs to be envisioning the entire lifetime. So if there's something now that will someday need to happen, you need to note it as an action item now and estimate at what date in the future the client needs to look at that. Okay. And it's a strategy. It's all the strategies related to anything having to do with tax. You are skilled and experienced in the area of tax. As you look at the client's overall situation and you become immersed in their objectives and what they're trying to achieve, well, you list all the strategies that you think are relevant for this client family. So it's comprehensive, it's written, it's across their entire lifetime, and it is a strategy. Now that's the strategy. What are the tactics? I'm saying that if you want to be an effective tax financial advisor who's in charge of forward planning and maybe even oversight over this strategy over time, you need to create the strategy, but you also need to create the action items that are required to implement the strategy. So you need to list all the action items, as I said, now and in the future, that you're currently aware of, all the things the client must do in order to remain on track to the tax strategy. So if there's things this year, next year, the following year, if there are action items or to-dos that need to happen in order for this client to remain on track to the tax strategy, those are the tactics. So you list, and you should be creating 10 minimum impressive, custom tailored action items or recommendations per client per year. So you update the strategy annually. That's what we recommend. And of course, the client pays every time the strategy is updated. And on an annual basis, you're creating 10 impressive action items. Now, what do I mean when I say impressive? I'm saying impressive or above average. Let me just back up and say that when you're creating a strategy in any area, but let's say tax, then I think we can all agree there are some kind of routine, almost boilerplate recommendations in all areas of finance, but for sure in tax, that are just considered routine wise practice. Okay. So let's call those boilerplate, or let's call those routine action items. So those must be there. And so you're going to list all the routine boilerplate recommendations that this client family needs to take in order to remain on track and make smart tax choices. Okay. But those are routine. It doesn't require someone of your skill and someone of your experience to come up with boilerplate recommendations. You're putting them there because they have to be there. They need to be there. They should be there. It would be strange if they were absent. Okay. So I'm not talking about those. I'm assuming you're going to provide the client with all the routine action items that are wise in their situation. Okay. I'm talking about above and beyond that. I'm talking about because you are skilled, because you're experienced in the field. What are some recommendations that only someone of your level of skill and experience is likely to come up with? That when the client reads it, they can tell it's impressive. They can tell it's above average. They can tell it was created by someone with some advanced skill. Okay. And so I'm saying track those separately and make sure that you're digging into the client file or questioning the client sufficiently. Keep going until you come up with at least 10 of those per year. So you're doing a deep dive into the client situation. You're coming up with at least 10 custom tailored ideas for this client family that when the client reads them, they go, wow, that's really a great idea. I never thought of that. Wow. I'm so glad I hired you. Do you see what I'm saying? So if you are updating the comprehensive written lifetime tax strategy at least annually, and you are generating at least 10 of these above average, non-routine, non-boilerplate, custom tailored, impressive action items on an annual basis, well, this is this is this is a service that is hard to find. I've been in this business for a long time. We hire tax subject matter experts of this type to create these strategies and tactics for our clients. Let me tell you, there are a lot of tax accountants out there that have a high level of technical skill. I would say above average technical skill. We have no problem finding tax accountants that are skilled. What we have a hard time finding is a tax accountant that's either willing or able to create a tax strategy the way I've just described it, and or to come up with a minimum of 10 above average action items and recommendations on an annual basis. Now, we pay a tax accountant. This is usually a partner in a local accounting firm that we bring on as a tax subject matter expert onto our team, just as contract. We pay on a contract basis for these two expectations, the strategy and the tactics. We pay well. And the subject matter, the tax accountants love serving on our team. And at one point, we had 11 offices in 9 different U.S. states. So, all I'm saying is if we want to find a tax accountant that's willing to deliver on these two expectations on an annual basis, and we're willing to pay them to do this, we generally have to interview 50 to 100 experienced, skilled tax accountants before we can find one who's able and willing to do what I'm describing. All right. So if I interview 50, I'm lucky if I find one who's able and willing to deliver at this high level. And if I interview 100, I'm talking about partners in successful, growing accounting firms. If I interview 100, I'm lucky if I can find 2 that are willing to deliver on these 2 expectations. So I'm describing this so that we can answer the question, about what is a tax accountant, a financial advisor? Yes, if you are doing forward planning and you are at the top of your field, you are 1 in 100, and clients are willing to pay substantially more if you're willing to deliver on the 2 expectations I described. So I hope that answers the question, and I hope this helps. Until next time, I'm Mark Little.